I've done pretty well in this social media entrepreneurial space. I just want my money doing more than 5%.
We have Anabolic Gabe, up and coming fitness personality here in Australia. Fascinating to hear about your background with the economics, the finance. What do you know about the bullion industry?
I know it's a bunch of guys with tin hats going around and hoarding a bunch of metal and preparing for doomsday.
Now, there's only 100 of these in the world.
Wow.
So that's
my God.
That's a 10 kilo silver coin.
That is...
Yeah.
Oh, Jesus.
Have you ever looked at the US debt clock? This is the big picture thesis for precious metals for me. And hyperinflation, you know, that's a huge economic event. All right, everybody, welcome to today's podcast. So I'm Sam Laurie from Liberty Bullion. I'm the founder of Liberty Bullion. We sell gold, silver and platinum coins and bars here in Melbourne, Australia. We've also got a Sydney store that's opened up as well. Now, on today's podcast, we have Anabolic Gabe, an up-and-coming fitness personality here in Australia. He's got quite a following online. So welcome to today's podcast. How are you doing?
Awesome. Thank you very much for having me. I'm excited. I've dipped my toes into the investing world. As of this year, it's been a goal for me. So this is awesome. 1 month in and I'm doing my first investing asset kind of podcast. So thank you for having me.
Oh, absolute pleasure. Well, look, it warms the heart to see, smart young men getting into the investing space, wanting to learn more. As someone who's been on my investing journey for over a decade now, it is a journey. It is something where you learn every day, and I continue to learn 10 years in every day. I guess the question from my end is what sparked the interest in investing? What got you started?
Yeah, well, going back a fair bit, I was always very academically driven. Initial goals were I wanted to be an economist for the RBA. I was a bit of a brainiac until I applied that same level of obsessiveness for academia and stuff to bodybuilding and nutrition and stuff.
Yep.
And it was only my last year of uni where social media really took off and it was becoming applying for grad roles and stuff.
Yeah.
So I studied finance and economics
Cool.
At Monash, and then was in the honours program for economics. So
awesome.
Yeah, I was very good with the maths and the numbers and all that. But it kind of came to a crossroads and I was like, do I earn 70k a year working for the RBA or do I do something a bit cooler, larger impact, hasn't been done before? I also figured pretty early I don't like working for other people as good as it can be.
Yep.
I mean, I had the technical knowledge in terms of finance and whatnot. Obviously studied derivatives and all the calculus and econometrics and things. And also the psychological biases as well.
Yeah.
I was a victim to that myself and I found I've almost got to dumb myself down a little bit because all that knowledge led to me just making indecision. And that's where I've realized I've done pretty well in this social media entrepreneurial space, decent cash flow. And I'm just the biggest cash hoarder ever. And I'm like, what am I doing here? I've actually got to instead of getting 5% on a term saving deposit, I've got to do something with this money.
Yeah.
So, yeah.
Well, look, it's fantastic that you've come to that realization so early, and you're absolutely right. 5% in your savings, particularly given that you're a young man with your whole life ahead of you and a healthy risk tolerance, is cash in the bank the place for you to be? I would say absolutely not, in my humble opinion. And it's great to see that you've come to that as well. And fascinating to hear about your background with the economics, the finance. Monash, I went to Melbourne Uni for finance and economics as well. So econometrics, the statistics, I'm getting flashbacks, Vietnam era flashbacks from my statistics classes at uni. So can definitely understand that you've got the solid foundation there. It's definitely going to set you up well for investing and trading. I would say that what you've touched on there about psychology and the importance of psychology in trading, it's everything. I mean, the way I think of it, learning how to trade, the first year or two is about learning concepts, fundamental analysis, technical analysis. You would have covered fundamental analysis in uni, but technical analysis, charts. I mean, in uni they talk about the efficient market hypothesis. The minute you step into the real world and the real markets, you learn that that's essentially all BS. Right? And then the question becomes, well, now what? Right? Humans can be irrational and very irrational at times, and how do you take advantage of that as a trader? And that's when you start to look at charts. Technical analysis is incredibly important. The study of charts, Elliott wave theory, Gann theory, all of these different chart analysis theories and patterns and and putting it all together with fundamentals, that's the first couple years. And after that, you think you've got it, right? You think you've got the whole picture. And then you run into psychology. You really run into psychology. And that's what the next couple of years is really about. It teaches you more about yourself than anything else will. You come up against all of those biases inside yourself, and you're going to have to overcome them in order to become profitable. And that's, to me, what was way harder than reading books about technical analysis or learning the basics of fundamentals. It was mastering your own psychology, mastering your own emotions, mastering all of that. To me, that was the big challenge, and overcoming that was the big stepping stone that got me to finally, after years and years of losing money as a new trader, finally becoming profitable, which is what every trader dreams of. So I love what you've mentioned there about psychology. I couldn't stress the importance of it enough. It's brutal, but very important.
Yep.
So I guess the question becomes, what are you interested in trading? What are you interested in investing in? What have you researched so far, and where's your head at?
I don't know if it's so much interest. I just want my money to actually be doing something for me.
Yeah.
Maybe there's a bit of passion there, but like, why would I be passionate about DCAing 5 to 10K a month into IVV and the S&P? I'm just like, I just want my money doing more than 5%.
Well, that's it. And, you know, it's funny what you've said there about I want to make my money work harder, where there's a certain point you come to where you have to realize that passive investing suits the vast majority of people the best, right? Where you just dump it in and you forget about it. You buy an ETF, you buy a group of ETFs, mindless almost after that. That suits most people the best. But when you get to that point that you've reached where you go, I want to juice the returns a bit, I want to do a bit better, I want to really push the envelope here, that's when you start going, okay, well, I want to be more active with my investing. I want to buy the ETFs at the right time. I want to try and look at charts and go, is now the right time to buy this, or is now the right time to buy this instead? And you know, that's when you really start to increase that overall portfolio return by making better trades at better points in time. And that, I think, is when you start to become the next level of investor. What's important to remember as well is that passive level of investing, it really is suitable for most people, and it's something that most people should aspire to as well. Most people never start investing properly. And I think that's something that's so key to think about. And again, why, you know, I'm so happy to see you taking it on so early and wanting to juice that return so early, is that for most people, they never get interested in it. They never really see the importance of it, or maybe not until their 30s or their 40s or their 50s. But here you are, you know, mid-20s and already putting the time in. So yeah. I
guess my only regret is why didn't I start when I was 19? I actually did, like, through COVID, the first time I invested, I bought like 2 Vanguard ETFs, dumped like 10K in it, which would have been half my net wealth at the time. And then COVID happened a month after, and it reduced by 40%. And even still to this day, that is still like up, doubled. Even though I literally timed the market the worst possible place, it's still like doubled. So my only regret is, why didn't I just build these habits earlier and start putting more money in? But whatever, the second best time to start is now.
And look, I have that conversation with clients almost every day, particularly new clients who are investing for the first time into the precious metals. They say, oh, look, I wish I'd started buying gold 20 years ago when it was $300 or $400 an ounce, and here we are today at 7,000. And all I can say is, look, absolutely. I wish that I started buying gold in the early 2000s, but I was born in 1996. So I would have been 5 years old going into the bullion dealer, you know, with what money, right? So, you know, the best time to plant a tree was 20 years ago. The second best time is right bloody now. But you can't beat yourself up over that stuff. And, you know, it's better than switching on in another 10 years when these asset prices are way higher and, you know, and you could have made all this money, and it's better to switch on now. So that's why I always say, that the time is now. And particularly with silver, you look at the rally that silver's had. I mean, silver's almost tripled over the last 12, 14 months. So that is massive performance, and that is something where, would it have been better to buy 2 years ago? Oh, absolutely. But have you got a time machine? I don't have one, and I don't think I'll be able to find one either. I have been lifting weights for over 10 years, and I did play rugby in high school, and I do still go to the gym every now and again. I may not look like it at the moment, but I do see that there's certain parallels between growing yourself as an investor and growing yourself as a bodybuilder, where it's repetition, it's time in the gym, it's pain, it's learning, it's research. All of that applies to bodybuilding applies directly to investing as well. So if you go to the gym once a week, well, you're going to have a lot less progress than someone who goes 4 times a week, right? Yeah. And the same with investing. If you spend an hour a week learning about investing, you're going to get a lot less results than someone that puts in 4 hours a week. Same with investing, right? You can have all the best intentions of the world about, next year I'm going to invest, and next year I'm going to put the time in, and, New Year's resolution, new year, new me. Next year I'm going to do it. But what action are you taking now? I guess that also comes back to something that you said earlier as well about analysis paralysis, right? Yeah. Where even really smart guys who have all of the education and the background, they just sat there with all the research. Mm-hmm. Whereas maybe people that are a little bit less informed or less educated take action maybe faster. Therefore can see the gains and returns of that action faster than someone who's smarter and more educated and who never took the leap.
Yeah, it's just building those habits. It's like the earlier you start, the better. The earlier I start, putting more of my dividends or whatever from my company towards assets that are going to grow in the long term. That's better habits and open up my knowledge and behaviors. Like I've already learned so much in 1 month about all that. It's also interesting though, because then I believe there becomes a point of diminishing returns. If you're trying to do too much, obsess too much,
I agree.
Then you reach a point where your fatigue exceeds your stimulus and you're actually just shooting yourself in the foot.
Yep.
Which is like why people hire me, for example, as a coach. Most of my clientele are extremely time poor, and I say, look, I'm a competitive bodybuilder and I only train 4 times a week for an hour each session. You really don't need that much. It's quality over quantity, doing the right things. So it's just about starting and making those habits work.
I completely agree with that as well. Not to say that we're the Mike Mentzes of the world, but sometimes less is more. And it's the same with investing, where yes, 4 hours a week is better than 1 hour a week, but is 40 hours a week 10 times better than 4 hours a week? I don't think so. And particularly when you're just putting the time in the right places, following the right people, learning the most important things, you can get everything you need out of much less than 40 hours a week, right? So I fully agree. The law of diminishing returns applies in both areas as well. But lots of similarities there. Mm-hmm. So I guess another question for me is, as somebody who's getting into investing and trading for the first time, what do you know about the bullion industry?
I know it's a bunch of guys with tin hats going around and hoarding a bunch of metal and preparing for doomsday. But no, I know.
I'll take it.
It's I don't know. It's the more advanced investing gets, it's the more you go back to the primal instincts of investing into things with actual intrinsic value rather than bubble inflated things that are made up and hype around it. The more things change, the more they stay the same. And there's only a certain amount of precious metals there, much like the hypothesis or value proposition of something like Bitcoin. It's completely finite. I also know it's like a hedge against the stock market somewhat, is what I've heard. I don't know how technically correct that is. I mean, the only thing I had, as I said, is this chain here.
Which is beautiful.
It's 18 carat, 50 grams. I think it's almost 10 grand or something now. Intrinsic value. So definitely is something I'm open to investing in, weighting a certain proportion of my income towards precious metals and things. For me, it's like, I'm an ultra minimalist. I hate personal possessions. Like, I find they mentally clutter me, and I'm like, do I need a safe to store this shit? Like, that's the last thing I want. So I'm like, and then people are against all the paper trades, and because it's a load of rubbish. So I'm looking to get into it. Okay. So I guess that's why I'm here to learn a little bit.
Cool. Well, look, I love hearing that. I always love asking people their opinions or thoughts on the industry coming in for the first time. It's fascinating to me to hear that from others. And a few things that you've said there, I can absolutely understand and agree with and can expand on. So what you said about paper versus physical, I think is really important for people to understand. But we'll address that secondly. Something I think even more important than that is about cycles, where something that you said about, I'm just an investor, I just want to put money in the right place at the right time. You mentioned overvalued paper tech stocks or not buying things like that, and then buying something that's maybe counter-cyclical to the stock market, like precious metals, something that's undervalued on the way up instead of something that's overvalued and maybe on the way down, right? That's not something you want to buy. You want to buy something low and going up. As a trader and an investor as well, I am all about cycles. So history, economic history, it moves in cycles. Things go up, things go down. Some things go up at this point in time, others go up at this point in time. Things go down at this point in time, others go down at this point in time. So picking the right asset class for the right time period is very important, and not piling into the hottest trade of the day at generally very high valuations that can save you a lot of money on the downside, but also buying something that's incredibly undervalued close to the bottom can make you a lot of money on the upside.
Yep.
So, I look at the US tech stocks at the moment, and, the Nvidias of the world, Microsoft, Apple, Google, all of these big companies, and some of their valuations are insane. You look at their price to earnings ratios, insane ratios. You look at Palantir, nuts, absolutely nuts. And, that's bubble territory in terms of PE, and that's not where you want to be applying your capital as an investor, in my humble opinion.
Do you have a rule of thumb for PE? Like what ratios, red flags?
If you look back throughout history, PEs have generally been a lot lower. Ever since 1971, when they took us off the gold standard, that's really allowed PEs to blow out because of fiat currency and the volatility in the markets that's come. Ever since 71, the stock market's become a lot more volatile. Precious metals have become a lot more volatile. Real estate's become a lot more volatile. All the markets have become a lot more volatile, and that's allowed opportunity for those who know how to trade. So going back to your question about PEs, if you look back before 71, PEs were a lot lower. After 71, PEs have been a lot higher. I don't necessarily watch PEs like that. I watch the index. If the index looks like it's about to roll over, I don't want to own pretty much anything that will track the index.
Okay.
I don't care what the PE is. I don't care what the earnings per share are. I don't care what the fundamentals look like, because the index is about to move.
Yeah.
So I think that that's quite an important thing for investors to think about. Fundamentals are very important, but they're only half the game. Technical analysis is the other half. So you might own great companies. An example. In 2000, Microsoft was trading at, $120 a share or something like that, making $1 billion a year in profit. 2008, it was trading at, $40 a share?
Yep.
We're making $2 billion a year in profit. The fundamentals got better. The share price went less than half.
Yep.
So if you just hold on to fundamentals and go, the PE, it's starting to come good, you're only getting half the story. That's why you've really got to watch indices. You've really got to do technical analysis to be able to see where indices are going. You've got to watch central banks. You've got to watch monetary policy. What are they doing with interest rates? Are they raising interest rates substantially? In which case, the indices might come under a lot of pressure. And these companies that you own that have strong fundamentals, they might drop a fair bit.
Yeah.
To me, it in terms of a philosophical view of the markets, it starts at the big picture, the overview. Do I expect indices to go up or down? Do I expect interest rates to go up or down? Do I expect risk assets to do well or not? Do I expect inflation to go up or down? And all of these things have led me to precious metals, where I go, tech stocks are overvalued.
Yep.
Indices, the PE ratios, it's a bit too crazy. Not to say it could never go up again, but it's just too crazy. I'm not going to apply capital there. Precious metals, I've been buying physical precious metals for 5 years now, and I've been trading them with CFDs and futures contracts for 7. When I first started trading gold, it was $1,200 an ounce in 2018. Now we're at $5,000 an ounce.
Yep.
That to me is an insane gain for an insanely low risk asset over 7 years. The opportunity cost of being in stocks when you've got something like gold and silver tripling in the last year or so, that to me is what's got me so interested in commodities, where the general stock market, the Googles of the world, the Apples, the Nvidias, I don't own any, none. I am extremely overweight as an investor, commodities, mainly precious metals, but also oil, uranium, gas, other commodities, but mainly precious metals, because in the 1970s, the precious metals ran the hardest. So that's kind of my 2 cents as a bullion guy. as someone who's got that finance and economics background, I mean, what are your thoughts on precious metals, inflation, central banks? Do you have a view on what's going on around the world?
Yeah, I probably should spend a little bit more time touching on it. I just know, like, first Tuesday of every month, the RBA announced the new rates. Oh, it's gone up, It's gone down. I don't have property anyway, whatever.
Good man.
I don't know. I guess that's what this year's all about. I made 2026 my goal of starting investing, so I'm trying to put one foot in front of the other and just slowly learn. But I do really like your thesis on, the intrinsic value of the good old-fashioned things that make society move.
Yeah.
So definitely, like, open to it, and I guess it's just how I apply that in. I'm someone who wants geographical freedom and stuff, so, like, maybe a safe in my house isn't the best option.
I was going to say, touching on that note about the safe in the house, so we've got clients who are traveling the world, traveling the country, they don't necessarily want to keep metals at home, and particularly when we're talking large clients with really large quantities here, millions and millions of dollars, there's security concerns, right? They don't want to keep that at home. So in the building that you're in right now, we sit on top of the Melbourne Vault. They're in the basement. We offer free delivery and free pickup from them for our clients. And we've got our clients, I mean, they've got hundreds of millions stored down there. So if you were to say, okay, I want real physical precious metals, I want zero counterparty risk, I want something where I don't have to trust the financial institution that they're good for it, I know that it's real, I know that it's mine, but you don't want to hold it at home, you just set up an account with the Melbourne Vault, we can drop it down there for you, you can take it down there yourself. That would be my fix for your quandary, because it's understandable, and particularly, if you a minimalist. I mean, I'm not particularly materialistic in that sense. I keep quite a minimal kind of. I don't like clutter that much. Yeah. I'm with you. So I do keep some precious metals at home, but I keep a lot in the vault.
Yeah, right. Is it fairly low overhead to store it and security wise, or is
look, it's not much. To give you an idea, they charge you a couple $100 a year for a box down there. Now, if you're keeping a fair chunk of metals down there, it really doesn't add up to much. And they do have a custodial option as well, where it's a couple percent of the metal value a year, like 1% to 2%. But given that silver's tripled in the last year and a bit, and if you're giving them 1 or 2% and it's tripled, it's pretty reasonable. And particularly given, it's biometric security, 4.5 ton vault door, armed guards, there's sensors in the walls to detect tunneling and stuff. And, it's Fort Knox down there, except they've actually got the metal. So
Oh, that's awesome. So for someone like me, would you recommend just get in when I can, or should I try to time the market somewhat about these precious metals?
Look, this is such a good question. It's one I get all the time. People say, is today a good day to buy? I've got a background in trading. I would say I'm a long-term swing trader as who I am as a trader. The whole picking the day-to-day of when to buy, is today the right day or is tomorrow better? Honestly, I have no idea. I am not a very good day trader. That is my limitation. I know my limits as a trader, and that is a big limit. So when people ask me that question, I say, look, it's always a good time to swap fiat currency for real precious metals. The long-term trend is clearly up. We're in a high inflation environment. Central banks are going to keep printing currency. Inflation is only going to get worse. Who knows what the price of this stuff does day to day? It very well could drop over the next week. I have no idea. But I know that over the next year, 2 years, 5 years, 10 years, the trend will be up. You'll be a happy investor. Life will be good. So picking the day-to-day, I don't think it's a wise thing to do necessarily. Look, if you are a really good day trader, throw what I've said in the bin. But for the average person out there, for the average investor, I just don't think it's a wise strategy. I think the more wise strategy is to just buy, price drops, buy some more. If it goes up, buy some more. Dollar cost average sort of thing.
So you don't reckon, for me, I should just dump money in and buy a gold bar and put it in the safe? I should chuck
now you're asking the real questions. If you have a big lump sum to start off with, and you're wondering, what do I do here? Do I just pop it in all at once? Do I dollar cost average in over time? The two different strategies have their merits. I lean towards the first, dump it all in at once. The reason being is that price tends upwards over time. So even if it drops off over the next week, it might pump up over the next two, and then you get a worse price next week, but better price next week, but you get a significantly worse price the week after. So if price tends up over time, I generally say, if it were me, I would just dump it in.
Okay.
And then as you get more income over time, then you just dump that in and dump that in and dump that in, and you DCA with that. But if you're starting off with a big dollar chunk, given that price tends up, and particularly given that we've seen a bit of a pullback over the last few weeks, I'd be buying the dip here. Is my 2 cents.
I presume they would, but I don't know what your stance is on leverage and things, but if, for example, I need to buy an investment property or something, does the bank use that as collateral? Or
So this is a great question, and this is one where, so historically speaking, banks have offered loans against metals as collateral, but they don't do it at the moment in the West. Now, having said that, there's a bank in America that's just started doing it called Battle Bank. I'm trying to speak to the owner of it to bring it over here, Battle Bank. In India, the commercial banks over there have just started doing it. But my prediction is that within the next 5 years, Aussie banks will offer the product. As more Aussies get into the precious metals, as more Aussies have more of their wealth tied up in the precious metals, banks will have a bigger incentive to lend against them.
If you are over allocated to precious metals, is it easy to liquidate if you need cash, or is it you get stung? Okay.
No, incredibly. So it's the most liquid asset class of all. So the reason I say that is if you brought your gold or silver into me today, you could get physical cash or bank transfer on the same day.
Yeah.
Right? That beats shares, which is T+2 settlement. It beats property, where it's 3 months settlement.
Yeah.
Right?
With all the fees and everything as well.
Exactly. So that's why I say that precious metals is the most liquid traditional asset class of all. It's same day settlement.
And is that what you call the spread, like the price that you buy for versus sell for?
Exactly. So the spread is the difference between the buy and sell price. Now, when you're buying from us, you buy over the spot price. It's a matter of how much, depending on what products. Coins are further over spot than bars, and high premium products, low premium products. But you're always paying over spot. And then when you bring it back to us, we'll pay you full spot up to the 1 kilo size for silver bars.
Okay.
So you get spot on the way out, and you pay spot plus a premium on the way in.
Yeah. And obviously silver's been massively in the headlines lately.
Yeah.
So wasn't there the thing that the paper contracts were selling for 60% of what people were buying? There was a massive difference there.
Absolutely. So there's a huge disconnect in the market between paper contracts and physical metal at the moment, and you can see that at the bullion dealers. We're talking about our spreads. We used to have about a 5% spread on silver kilos. Today we're at about 20% on silver kilos. Now that's not because we're greedy. Every other bullion dealer is the same. Our suppliers are charging us way higher on spreads. So of course we have to pass that on to the client. Of course our pricing significantly higher. When it comes to the disconnect between the paper markets and the physical, you're absolutely right. If you look at the COMEX price in the West at the moment versus the Shanghai price, which is physical, there's a huge disconnect, all-time high disconnect there.
Yeah, wow.
And that's telling you that there's a huge physical shortage of silver in the market. And we're seeing that at the bullion dealer. At the moment, if you come in, you say, I want to buy silver kilos, Sam, I say, great. I can take the order today, a pre-order. We'll lock you in a price. You send the funds. The silver will come in the next 3 months, and then you can come pick it up, or we'll drop it down, or we'll deliver it to you when it comes in. Okay. So I'll order it with the refinery today, turn around after you order it with me, I'll order it with the refinery, you send me the funds, I'll send them the funds, and then we wait for 3 months. Normally, 3 months, it's not like that. Normally, it's a couple of weeks, but just because of the level of demand in the market, the disconnect between paper and physical prices, it's just gone crazy.
Okay, so that I understand this correctly, it's like if you wanted to buy a silver contract or something that's not actually physical, for example, you might be able to buy it for like $90 an ounce or whatever it is, but if you're like, hey, can you give it to me for $90 an ounce, you're like, sorry brother, price is still $145 or whatever.
Exactly. So, and people ask this all the time. They come into the bullion deal, they say, look, I've seen the price on Google, I've checked the spot price, can you sell it to me at this price? And we go, absolutely not, we buy it at that price. Right? And we're a business, we're not a charity, we got to make a dollar, right? So you're always going to pay over spot on the way in, and it's just a matter of how much. For a 1 ounce silver coin, you could be paying 30% over spot. So, on the screen, it might say, $85 or whatever. But, you're going to be paying over 100 for it. You go, whoa, where's the disconnect? Okay. Well, it's crazy at the moment. When it comes to predicting the physical silver market, it comes down to two predictions. You're predicting spot price and you're also predicting premiums. So my kind of prediction is that in order for premiums to come down again to reasonable levels, I would say, spot price has to come up. That disconnect between the Shanghai price and the US price needs to close.
Yeah.
And it'll close by the US price coming up.
Okay.
So when it does again, I think the premiums will come back in, and it'll be cheaper to transact in physical metals. Right now at the moment, premiums have blown out, and it's insane. What we're paying the refineries, what we're charging clients, it's way higher than normal, and I can't wait for the premiums to come back in a bit again. And for product availability to get better, I mean, I'm waiting on, $40 or $50 million of product right now across my different suppliers. And today we picked up 600 kilos of silver, which is over $2 million. But we're waiting on thousands and thousands and thousands of kilos to fill existing orders for clients. So it's a crazy game.
Yeah.
And, the dollar values get really big really quick.
Yeah. So what's the actual utility of firstly gold, and then I know silver's used in, is it not batteries or phones or something?
Well, silver's used in everything. So gold's it's predominantly a monetary metal, but it is used a bit in industry and like computer chips and stuff, as it's super conductive. You go down to JB Hi-Fi and you can buy those really expensive earbuds with the gold tipped 3.5mm headphone jacks, stuff like that. So gold is used in electronics, but silver's the most industrially useful metal on the planet. It's in the highest number of patents out of any metal that there is, mainly in electronics, but also in solar panels, in phones, circuitry, in weaponry, so missiles and stuff, cars, particularly electric cars. So it's an insanely useful metal industrially, and there's a physical shortage across the world, and that physical shortage has been ongoing for over 5 years now.
Okay.
So every year we've been using about 200 to 300 million ounces of silver a year more than we mine and produce, which has led to this big cumulative deficit in the silver market. And now that deficit is coming to fruition with the silver price ripping to the upside. Look, I've been investing in silver for 5 years now myself, and I've been waiting for this to happen. I've seen the deficits every year. I've seen the usage of silver go through the roof. The demand for silver is in two components. There's the industrial demand, which is what you've rightly asked the question about, which is the majority of the demand for silver. But the other side of it's the monetary demand. And the monetary demand is growing rapidly. Rapidly. We're seeing it. We're at the coalface. We're seeing a huge increase in interest in investing in precious metals. You've seen it with the headlines and and the lines outside ABC Bullion, and all of that's been televised and it's out there on the mainstream media. That increase in interest is something that we're definitely experiencing as well. So it's not something that's going away. As I said, for me, my investment thesis centers around central banks, inflation, money printing, and something that I might want to show you actually is, have you ever looked at the US debt clock?
No, I don't think so.
Oh, all right. I definitely want to show you that on today's podcast. So let me get my trusty laptop up.
Yep.
One of the reasons that I'm so bullish on precious metals is that I fundamentally believe that the US debt is unpayable. So this is their national debt that we're talking about, their federal debt. So let's just do that. Let's close that. Okay. So what we can see here, US national debt, $38.675 trillion in debt. That is a lot of debt, if you ask me. I mean, I'm debt free, but that's a lot of debt. Now, here we got federal tax revenue. That's $5.3 trillion a year in tax revenue they're bringing at the federal level. So they're making money, right? They're bringing it in. But the problem is that they're spending $7.
Oh, wow.
Now, you've done maths.
Continues to grow.
Good man.
1.6 trillion.
Yeah, well, there it is. That's the federal deficit there. 1.7, yep. So that's how much they add to that every year.
Oh, wow.
Right? So you're a numbers man. You're gonna get the hang of this real quick.
Outpacing inflation as well.
Oh, absolutely it is. Yeah. Absolutely it is. So this is a very bad problem that's going the wrong way quite quickly. And neither side of politics seems to care. The Republicans aren't doing anything about this. Yeah. Remember DOGE, Department of Government Efficiency? That lasted all of about 30 seconds.
Okay. Yeah.
Didn't do anything at all. Didn't even make a dent, right? Yeah. Well, if the government's efficient, why is it still, running a $1.7 trillion deficit? Wow. So, $38 trillion in debt. They're adding to that almost $2 trillion a year. going the wrong way. It's unfixable. It's unpayable, I would say. You look at the debt to GDP ratio. Back in 1980, it was at 34.5%. Today, we're at 124%.
Okay.
Now,
Wait, what was that metric again, sorry?
The federal debt to GDP ratio.
Okay.
So that's how much debt they've got compared to the size of the economy,
Yeah.
the GDP, which you can argue is a more important figure than just the raw debt figure. Because
it doesn't tell you anything otherwise.
Yeah, exactly. So, but that tells you that debt's like really bad. It's really, really bad.
Yeah.
And going the wrong way. So my 2 cents is that this problem is not going to get solved. And historically speaking, going back to history here, you can go back to look at history books for different civilizations all throughout history. Whenever debt, federal debt, the country's national debt gets like this and gets unpayable, what you see are one or two things. Either a debt collapse, they say, hey, we can't pay. It's called an honest default. We can't pay. All of the US Treasury bondholders out there, you lose.
Wow. You
gave us your money, you lose. We're not getting it back to you. That's the first option. The second option is to inflate away the debt. So $38 trillion in debt sounds like a lot when, the dollar buys you as much as it does today. But if you just hyperinflate the dollar away to the point where $38 trillion buys you a bag of shopping at Woolies, it's payable again.
Yeah.
No worries.
Yeah.
But that also screws all the bondholders because they've got, what is a bond? Going back to your days in finance, a bond is a promise by a government of a certain amount of fiat currency at some point in the future.
Is America AAA or whatever the rating system is?
Yeah, but they're talking about devaluing them now.
Okay.
And countries across the world are dumping US treasuries, particularly at the central bank level. So we showed a chart of this on a video we did recently where central banks across the world are decreasing their US treasury holdings as a percentage of their total holdings and rapidly increasing their gold holdings instead. They're selling down their US treasuries and they're buying up gold instead. So all of that's horrible for the US dollar, and that's why the US dollar is down over 12% against the Aussie dollar in the last year.
Finally.
Yeah, finally. As someone who's flying to the US on Sunday, I could use
getting absolutely destroyed every time I go to America.
Man,
I just tap and don't look anymore. I just cry.
Yeah. Well, yeah, I feel you on that one. It'd be nice to
the
have
Australian peso, I've been calling it.
The Pacific peso is what I call it.
Pacific peso.
But yeah, look, this is the big picture thesis for precious metals for me.
I like that a lot. Yeah,
I think we're going into hyperinflation. I know that's a really big statement to make. And I'm going to cop a lot of flack for it. A lot of people will disagree. But I just don't see another way out.
Yep.
I think that we're going into hyperinflation. I think people are going to dump the US dollar, particularly as it's losing its world reserve currency status. That fall in the value of the US dollar historically means a massive rise in the value of gold and silver. That's why this is only getting started, this gold and silver bull run. I'm not selling here at all. I'm buying more because this is some big picture stuff, and hyperinflation, the importance of that cannot be understated. That's a huge economic event. Yeah.
I like that a lot. That's fascinating.
Yeah, no, I appreciate it. Now, something else I wanted to show you as well, another little website. Have you seen a website called demonocracy.info?
No, never.
Oh, yeah, I've got to show you this one. So this one, it's economic infographics, right? So these are how to visualize how much money's been printed. So in 2020, back when COVID hit, they locked us inside. Everyone was watching Tiger King and they told us we couldn't go to the gym for our own health. They printed a bunch of money, right? They handed out JobKeeper, JobSeeker, everything, right? They handed it out. And it's not just Australia. This is focusing on America here, where they did the same thing. They stimmy checks, it was everything. So let's just talk about how much. That's what $100 looks like. That's what 10,000 looks like. That's what 1 million in cash looks like. That's what 100 million in cash looks like with your little couch of cash
Breaking
there.
Bad.
Yeah, damn right. Walter White.
Yeah.
Now over here we've got $1 billion in cash. Bloody hell, that's that would take a couple of boys to move that. That looks like it's got some weight to it. And that's how much they printed every day in 2020. It's $27 billion a day. So we were at home watching Tiger King and they were printing.
Yeah. I mean, the average person just looks at the stimulus checks, keeps them happy. It's like a drug.
Exactly.
And they don't question
Why would you complain? You're getting free money to stay at home and watch Tiger King.
Yeah.
Right? Like, what's wrong with that? You'd have to be crazy to take issue with that.
Yeah.
Right? But the economists in the room are screaming from the rooftops going, guys, this is not good. This is going to lead to massive inflation. And then what did we do? Well, we started betting on it. We went, you know what? We can't fix the world. I'm not a politician. I don't get to make the rules. I'm going to bet on it. I'm going to bet on the consequences of all of this. So I bought massive amounts of inflation hedge assets. Inflation's ripped to the upside. Massive cost of living crisis across the world, which really hurts the average person. I don't want to take away from that for even half a second. I feel for the average person out there. But I'm an investor, I'm a trader, and I'm profiting from inflation.
Well, no one teaches you this stuff, even in university. Like, you learn... I learned how to make calculators on Excel for my derivatives exams and make sure I smash everyone in my grades, but no one teaches me what to actually do with my money and this kind of stuff. So it's almost the Wild West, and you got to learn it for yourself. And I got to plead with people, can I please learn your ways, sir? And just I can actually stay ahead, you know?
Well, that's it. And for me, I went to uni and, you know, Melbourne Uni, finance and economics, and they didn't teach me how to make money with money. Man, and in my last year, my third year of economics, final year of economics, macroeconomics, they tried to teach me modern monetary theory. Crazy. Where they go, now this was a while ago now, ancient history that I was back at uni, but they go to me, Sam, ever since 2008, the GFC, we've printed a lot of money, right? Quantitative easing, QE1, QE2, QE3, QE4, QE5, not QE, you know. They've printed all of this currency, all of this money. And keep in mind, this was, you know, back in 2017 or 2018 that they were telling me this. And they go, and it just hasn't led to inflation. There's just been low inflation. It's been, you know, 2% inflation or lower. Therefore, Sam, logically speaking, printing money does not lead to inflation.
Right.
They taught me this in third year macroeconomics at uni in a lecture hall in a subject where I was paying, you know, money to attend. And they were teaching me this. And I remember sitting there and I went, pull the other one. It's got bells on it. I know economic history. I studied hyperinflation in high school history class. I know that printing money does lead to inflation. And at that point, I sat back. I said, nope, this is BS. And then I started going down the rabbit hole and learning about Austrian economics, because at uni they teach you Keynesian economics, right? It's all John Maynard Keynes you know, it's your Y equals C plus I plus G plus X minus M and all of that crap. And that's not economics, man. You know, print more money, bail us out of a recession. That's not economics. That's not economics.
It's all theoretical stuff that makes sense in the textbook, but in the real world application.
Exactly. And now in uni they teach you all about Keynesian economics, and they'll maybe make a slight mention of Austrian school economics. So those are guys like Milton Friedman. Those are guys like Thomas Sowell. They're people that believe in sound money. So these are guys that talk about gold and silver. They talk about the effects of money printing. They talk about inflation. They talk about who's to blame for inflation. You know, we live in a world where the government will tell you inflation's this, and then, you know, you go to Woolies and you're getting ripped off for milk these days, right? Or are you really getting ripped off? Is Woolies really ripping you off, or is the dollar losing all of its value? You know, it's hard to tell. Is it the greedy companies, or is it the government that prints this stuff out of thin air?
So do you think Australia is as bad as America, or do you think we're just such a small fish and we follow Big Brother?
As a commodities producer, I think we're set to do a lot better from what's to come than America is. You know, we produce the second amount of gold out of any country in the world. We produce a lot of other stuff as well, iron ore, meat, cattle, food, etc. Like we produce commodities, and I think commodities will do quite well. Having said all that, we are America's little brother, and America is the centerpiece of the global financial system. So for me, when I'm watching what's going on around the world and stuff, I'm not necessarily looking at it from an Australian perspective. I'm an Aussie, I live in Australia, I invest in Aussie dollars, cool. But I'm looking at it from an international perspective, particularly an American perspective, because what happens in America matters in some ways more than what matters here to us, because the whole system's built around America. And there's a saying in economics as well, or finance, America catches if America sneezes, the rest of the world catches a cold. So you need to be watching America. You need to be watching their national debt. You know, you think, how does that matter to us as an Australian, the US national debt? Well, let's talk about it for a second. What does the RBA hold as their assets to back our currency?
Presume the reserve currency of the world.
Correct,
Yeah.
which is US Treasuries.
Yeah.
So if the US dollar loses all of its value, what happens to the reserves of the Australian dollar?
Yeah, the value goes down.
Exactly. So that's why I say that even though we're an island that's, 7,000 Ks away or 10,000 Ks away or whatever it is, they matter more than we do to you as an Australian investor.
Yeah.
And that's hard to get across to people. They say, oh, who cares about the Yanks? Well,
Yeah.
you should.
Yeah, right.
Because they're very important. They run the world, for better or worse.
Yeah. I had another question which is a bit unrelated, but you're wearing your flamboyant jewelry just for the show.
Yeah.
But I could never even, I've got a girlfriend at the moment. If I propose to her in the future, whatever.
Yeah, awesome.
I feel like places like Tiffany and that, you get scammed, right? Because they probably have a 50% markup on the actual value of it. Whereas you could go and get the band yourself, and you could go and get the diamond from Africa or something.
Yes. So look, I've got a fiance. I recently got engaged, and we went to New York to buy the ring.
Yeah.
So look, you are barking up the right tree. In the West, when you buy gold jewelry, you do pay a hefty premium for it, right? If you were to buy gold jewelry in Thailand, which is where I got all this stuff, you get it way cheaper, and by cheaper I mean closer to spot price.
Yeah.
Gold jewelry is never cheap, but it's closer to spot price. It's more investment grade. Mm-hmm. Whereas you go to Tiffany's, you're going to be paying, double, triple, quadruple spot price. It's $700 a gold, but I'm giving you $3,000. What's going on here? Look, yes. As I said, I went to New York to the Diamond District there. The tracks
Uncut
NYC.
Gems.
Exactly.
Yeah.
Oh, that's such a good movie.
Safdie brothers.
Yes. Yeah. So I went to there, and we sat down at a shop. This lovely gentleman took us through all of the diamond grading and this and that, and we picked a stone and we picked a band, and he put it all together for us, and we picked it up the next day. And that ring, if we'd bought it in Australia, it would be double the cost to us.
There's your flights covered already.
We saved tens of thousands of dollars by buying it over there, right? But here's the thing as well, right? Happy wife, happy life. If the missus loves it, a lot of it's about the experience. And we had a lovely experience at the place we went in New York, so would highly recommend it. But mostly it's about the experience. It's about who you sit down with. It's about how they make you feel, how they make her feel. Because let's be honest, her opinion is the really important one here.
I thought she's not meant to know about the ring. You just pop out with it. Or
look, some people do that.
Different.
I was clearing up front with her the whole way, and I asked her, "What do you want? What sort of ring would you like? Would you like a round cut diamond? Would you like a baguette cut diamond? Would you like something that's not a diamond? Would you like a different stone? Would you like a ruby or sapphires or what do you like, right? Because she's the one wearing it, and to be frankly honest, I have no idea what she really wants unless I ask her. But hey, some guys might know their women better than I do, and their tastes and their preferences. But for me, I just figured I'm going to skip all of that. I'm going to take her to New York. We're going to go sit down in a shop on the Diamond District, and she's going to pick what she wants.
Yeah. What's your thought on lab-grown diamonds?
So lab-grown diamonds... This is why I don't invest in diamonds, right? Where if you look at the price of natural diamonds, they've come off hard over the last few years, whereas most other commodity prices have actually gone up because you can't print commodities, right? Now, this is because of the lab-grown diamonds, right? It's getting cheaper and cheaper to make better and better lab-grown diamonds. Would I buy a lab-grown diamond for my fiance's engagement ring? Look, I splashed out, I went natural because that's what she wanted. But if she said I wanted a lab, I would have bought her a lab. But she wanted a natural. Now, from now on, any diamond, like I bought her a diamond tennis bracelet, that was lab. And from now on, I think I'll just buy a lab. But if you're looking for the emotion of a stone, the emotion of a diamond, I think that's where natural comes into it. Okay. Now, I'm not a diamonds guy. I'm not a stones guy. I'm a bullion guy. I'm just the guy that has recently bought a wedding ring. But that's my kind of 2 cents on it.
Can I chime in here?
Yeah.
This is someone who's just also, just engaged. Just become engaged. Lab-grown diamonds. The future of lab-grown diamonds, according to my jeweler, is quantum computing. That's the entire reason they're selling them, so they can research more about quantum computing and using nice big flat sheets of diamond, because electrons and information can move so much faster using light rather than copper, gold, or silver, which is what is currently in computers. So that's why lab-grown diamonds are being sold.
I'm going to start shorting diamonds. Lab-grown diamonds then dilute normal diamonds. Surely the value would come down then.
But then the company stocks will go up because quantum computing will...
I actually want to talk about this for a second because the whole concept of shorting is so fascinating to me. Now, I've shorted plenty of... I've had short trades before in my time, and a lot of them have not worked out very well. I've had plenty of losing trades.
Money, whatever.
All right, it's just money, and I'm
just
up
numbers
overall,
on the screen,
right?
bro.
That's it. They print them out of thin air anyway, right? Who cares? But shorting is actually really, really hard. Even if you're bearish, even if you're right, picking the right entry, getting the right exit, not getting washed out during bear rally bounces, it's really hard. And in a fiat currency system where they print dollars out of thin air, just because you're bearish something doesn't necessarily mean it's going to drop in dollars. So for me, and this is just my 2 cents as a trader, as an investor, my philosophy on the whole long versus short thing is there's things out there that I wanted to short that I didn't short because instead I longed things that I wanted to long. Right? You have a certain amount of capital in your trading account. You can use it to either long things or short things or some combination thereof. And I pick mainly long because the money printer pushes everything or most things up over time. So NVIDIA, I was bearish on it for a long time. I wanted to short it. I'm glad I didn't because it kept going from where I wanted to short it. And then now it's come off, but I still wouldn't short it because there's commodities that I want to long instead. And the money printer is going to push them up. So shorting's really hard to get right. And I just wanted to, I guess, dissuade people against it in general. Sometimes there's great short trades, but just in general, I want to talk people out of it because
that's if you think about it, if you long things, the upside is infinity.
Exactly.
If you short things, the downside is limited, I guess.
And your downside is now unlimited because the stock price can keep going up forever, right? Shorting is super risky with limited reward and the money printer works against you. That's why in general, me philosophically, I just prefer longs over shorts. That's just me, and it's just something for you as an investor. Now, getting onto the note of bullion, we've got some product on the table. I do want to quickly have a little show and tell with it. So starting from over here, we've got a 1 ounce gold bar. So that's our own brand of gold, Liberty Bullion.
Awesome.
That's worth over $7,000 today.
Awesome.
That's our most popular gold product. We mainly sell gold by the ounce. And the reason being is this is the biggest size of bar that we'll pay full spot price for when you sell it back to us. So let's say you brought in a bar like this. This is a 10 ounce gold bar. So that's 70K in your hands.
Nice. Thanks very much.
Yep. Of course, we sell stuff like that as well. But when you bring that back to me, I'm only going to pay you 97% of spot price.
Is it because it's more liquid?
Exactly. Okay. Because it's more liquid. Because a lot more people have $7,000 ready to go than 70. So these sell all day long. But these sit on the shelf for a bit longer. Okay. That's why I say buy these instead of these, is because you can get full spot on the way out. And these, as I said, are our most popular gold product. I love gold, but I love silver even more. So this is a silver coin. It's a 1 ounce silver coin. That's Pacific coins from the Royal Australian Mint in Canberra. That's the Year of the Snake. It's the Lunar Series. It's there's Year of the Snake, Year of the Ox, Year of the Rabbit, etc., etc. I love coins.
1 ounce.
That's 1 ounce. I'll show you another coin in a little bit. These are our statues. So this is a 3 ounce silver statue. We've imported these from a guy in America who makes them called the Gold Spartan. So they're pure silver statues, the highest quality in the world. They do have a collectible value to them as well. They come with certificates and the artistry there is incredible.
Of course.
I love what they mean as well. So this one, a self-made man, you're chiseling yourself out of stone. As a bodybuilder, you'd be all over it. And as a self-made man.
Definitely. I'm all about that.
It speaks to me, and you can sit it on your desk. It's really cool. Now, this is our best-selling silver product. It's the 1 kilo silver bar. So chuck that in your hands. That is our bread and butter. We do those all day long. That is our best-selling product, bar none.
So these are very liquid.
Very liquid. You can get 100% of spot price for it. You bring it in, we'll either give you physical cash or bank transfer. and bang, off you go. So these, as I said, most popular product, the lowest premium way to invest in silver, so minimizing your transaction costs as an investor. So you're getting it as close to spot price as you can. And these we sell a lot of these.
Yeah. What's the market value on that one?
This one today is about 4,500. Let's get up the website. Let's get a live price for you because the price is always changing. We're at 4,595 bucks. 4,600 today. So yeah, it's moving. Now this one here is the luxury watch statue that we sell. So again, I'm a Rolex guy. I like my Rolexes.
Yep. I'm a Garmin guy.
We'll get you a Rolex guy soon. A few good trades, and we'll get you a Rolex. But yeah, I love luxury watches. I love luxury stuff. I've got expensive taste. What can I say? So yeah, it's just super cool. Now, something I did want to show you. Now, this is a bit of a rarity.
Yep.
This right here. This is, now there's only 100 of these in the world.
Wow.
This is a 10 kilo silver coin. This is out of my personal collection. I bought it.
10 kilos. Oh my God.
Yeah.
Jeez.
So let's get.
I'm gonna have to get a photo of that.
Yeah. Let's get that out. Oh, we need a bodybuilder here, eh?
10 kilo silver coin.
So that's
oh my God.
That's a 10 kilo silver coin.
That is.
Yeah.
Oh, Jesus. Put that on a barbell.
Yeah. So, as I said, they only make 100 of these in the whole world. This is my second 10 kilo coin that I've bought. I've also got a.
So that's 50K basically.
55 today with the premium on it. So
Jeez.
It's handmade, hence why it's high premium.
Yeah.
They only make 100 every year. I've also got one from last year, the year of the dragon. So this is my second 10 kilo silver coin that I've bought. As an investment, it's probably better to buy 10 1 kilo silver bars because you're going to get a lot cheaper than the coin.
Yeah.
But this has got a cool factor to it.
Yeah, it's a bit of a reward for yourself.
Yeah, well, that's it. And, you pop it in the pool room, as they say at home, and, you get to look at it. And to anybody who appreciates it,
that's awesome.
Oh, look at that, eh?
That was
It's chonky.
Yeah, that is amazing.
Yeah, so it's funny, actually. When I first got into bullion dealing, so I've had this business we started up 3 years ago now. But before I started this business, I actually worked at another bullion dealer as an employee. And when I worked for those guys, I sold a 10 kilo gold coin.
Wow. Okay.
Now, this was back in 2021 when the price of gold was about 80,000 Australian dollars a kilo. So that was an $840,000 coin with the premiums on it. Today, that coin would be worth $2.2 million.
Jeez.
It's
a decent house there.
Yeah, in 4 or 5 years, turning 850K into 2.2 mil.
Yeah, wow.
That's a pretty good investment.
Yeah.
And that's just a coin that sits in the safe and
Yep.
goes up. I'm sure he's still got it.
That is amazing.
And so the cool factor on these coins cannot be understated, but as an investment, the 1 kilo bar is the way to go.
Got you.
So it's pretty cool though. And I think when people ask me, Sam, you got all these cool statues and coins, and what do I do? Look, start off with the bars. Just get a low premium stack going of just kilo bars of silver. If you want to invest in gold, some 1 ounce gold bars. I like platinum a bit better at the moment than gold to invest in. Silver and platinum, where I'm focusing my money at the moment, because they're undervalued compared to gold on a ratio kind of basis. But that's how to do it. You buy your 1 kilo silver bars, you buy your 1 ounce platinum bars, you stack it all up. If you want some 1 ounce gold bars, you stack it all up. And then once you've built your kind of core stack of the low premium stuff that you could sell quite quickly for spot price and not feel too bad about it, that's when you can start to play around with the coins. When you buy coins can gain collector premium above and beyond just the price of the actual metal itself, right? Like coins can, really rare coins and stuff. But that only applies when you're selling it directly to a collector in the secondary market, and that's hassle that some people might not want. Maybe they just want to come into the bullion dealer, get quick cash. So bars are more suitable. And then, the last kind of evolution there is the statues. That's more once you've got a big stack that's made you a lot of money, you kind of want something that sits on your desk and reminds you of it. And that's when the statues come in. So there's something in my thesis that want to communicate to my clients, and I think it's really important that people know about, so I wanted to talk to you briefly about it, is something called the Commodities Supercycle Thesis.
Yep.
So to put it really simply, it's the idea that paper assets have been overinvested in for a while, and that commodities, hard assets, have been underinvested in for a while. In the fiat currency system that we've seen, the money printer's gone crazy, and that's led to a lot of prices being super inflated, but other prices haven't really moved much, particularly commodities prices. When you look at economics and you look at the money printing, there's a theory that the money flows to different places at different points in time called the Cantillon effect. It's all about money flows into real estate and stocks first. Well, the money printer, that's where it flows first.
Yep.
And then eventually it turns around and it flows into commodities second.
Okay.
Because you can't print money forever without inflation, and then inflation may not show up at first because you're looking for it in the wrong place. You're looking for inflation in the price of goods, in woolies, in clothes, in the price of cars, right? Whereas the inflation has been in assets.
Yep.
It's been in property. It's been in shares. It's been in Nvidia. That's where the inflation's been. So the Cantillon effect says that eventually that inflation, the money flows to commodities, to hard assets, and that's what my thesis is that we've seen over the last few years, is just the beginning of that flow, where if you look at ratio charts of the stock market priced in gold, or gold priced in the stock market, gold's just starting to break out against the US stock market. So this flow of capital is coming out of these overvalued tech stocks and paper markets, etc., and is flowing into commodities, and not just gold and silver, all commodities. Oil, gas, uranium, nickel, lithium, cobalt, zinc, iron ore, coal, all commodities are undervalued. And in the commodities supercycle thesis, commodities prices feed into each other, right? Because how do you get gold out of the ground? You mine for it.
Yeah.
How do you mine for it? Well, you buy a truck that's made out of steel and rubber and all these other commodities, and then you fill it with diesel, which is also another commodity. Yeah. So the price of pulling gold out of the ground is directly linked to the price of other commodities. So as one commodity runs, and then it makes the other commodity run, and they feed in on each other, and that's the commodities supercycle thesis, is the price of oil going up pushes the price of gold up, because now it's more expensive to mine gold, and the price has to go up. So that commodities supercycle thesis, I think, is really important for people to understand about the precious metal space. Is that a comment that you said at the beginning, which is actually remarkably true, I have to say, being a bullion dealer, is in this space there's a lot of people who think, that tinfoil hats and the world's going in tomorrow, and all banks are going to collapse tomorrow, and you get your money out, and blah, blah, blah. And look, maybe they're right. I'm not saying they're not.
I'm not saying it's bad to have a tinfoil hat.
Right? There's a lot of crazy stuff that happens in the world, and Epstein files, and whatever, right? Tinfoil hats have had a few wins over the last few years. But it's not the whole space. It's not the entire reason to buy precious metals. There's reasons to buy precious metals outside of that stuff, and it's a more broad commodities thesis where you go, commodities are super undervalued, commodities are going to rip, I want to invest in commodities. And if you look at as well, like looking back throughout history, the last time that inflation was as bad as it is today in the West, in US, Australia, UK, was in the 1970s. So what did gold and silver do during the 1970s? Well, gold went from $35 US an ounce in 1971. By 1980, 9 years later, it hit $850 US an ounce. Now, silver...
I should have bought back then.
Right? What were you doing in 71, mate? There wasn't even a twinkle in my father's eye. But that's it. And silver outperformed it percentage-wise. Silver went from just over $1 an ounce in 71, and then in 1980 it hit 50.
We should go gold panning this weekend out in the country.
Well, not a bad idea. We actually get a fair few prospectors roll through the store, and I think it'd be a really cool thing to do with your mates. Grab a couple of beers or something, go out camping, take a couple metal detectors. If you find something cool, if you don't, you had a great weekend out with your mates. Not not something I'd do as a full-time job. I'll stick to bullion dealing. The idea that commodities are the way to go, I think that's really important, because we live in a world where people just buy ETFs, they just buy the S&P and they buy the Nasdaq, and look, I can understand it. I can completely understand it. We've lived in that tech era for the last decade where tech stocks have gone ballistic, and you'd be an idiot not to have bought them 10 years ago, right? But it's not 10 years ago, it's today. Yeah. So what do you buy today?
Yeah. Did you play Minecraft growing up?
Yes, I did.
Nice. One of my favourite games ever. So it's literally like real life Minecraft, isn't
it? Yeah. Life is like a video game in a lot of ways, and even on if you play Grand Theft Auto, they've got the stock market on GTA 5 where you can trade stocks and stuff, and it is very much like that. And when you disconnect a little bit and you remove the emotion, treat life a bit more like a video game, you can be more successful as an investor. So I guess wrapping up today's podcast, which has been incredible, by the way. Do appreciate you coming in and taking the time with us. Do you have any questions for me? I mean, I've asked you a fair few. Do you have any questions for me?
Integrated some questions throughout, but one I had was, what's the tax like if you collect profits or capital gains, things like that, on precious metals?
Yeah, so precious metals don't pay dividends, so you'll never pay income tax on precious metals. It's just capital gains. Yeah. So when you sell, there'll be a capital gain or loss, generally a capital gain, given price goes up over time. Depending how long that you hold it for. Now, I'm not an accountant, I'm not licensed to provide tax advice here, but if you hold it longer than a year, you get a 50% discount, a capital gains discount. So, it goes from a certain amount to less, and then you add that to your taxable income from the year. Yep. I'm not an accountant, speak to an accountant about it, but that's taxes on bullion. It's just a capital gain that you pay when you sell it. And there's no GST when you buy it. There's no stamp duty when you buy it as well, like there is a property. You just pay what you get your metal, you go home.
Next question. If I wanted to just, buy a gold bar, 400 grand, do you take Amex?
So short answer is no, we don't accept cards here. We accept payment, bank transfer, or physical cash. There is a service called Payment Logic where you can actually upload your Liberty Bullion invoice and make payment using Amex. But they'll charge you quite a hefty
2%
fee.
or something.
Exactly. But then you get your points, right? So if you want to do that, you can use Payment Logic. But we as a business, we do not accept cards. It's bank transfer or cash.
I guess then you'd have the risk of chargebacks and people going crazy, and you've already given the asset. So.
And think about it as well, right? Think about it from a criminal's perspective for a second. That you're a scammer, right? You go out, you steal credit cards. What was the first thing that you'd like to buy with those stolen credit cards?
Something with intrinsic value that you can sell on the black market.
Exactly. Something like a gold bar that you could take into another bullion dealer and get cash for on the spot.
That's very interesting.
This is the best way. Right, and that's why we do not accept card.
Oh, that's awesome.
Yeah. All right. Well, as I said, absolute pleasure having you today. Hoping that you come in more often, that you become a client of ours, of course. Something that I did also want to do as well is give you a gift. So I like to start people off with their first ounce of silver. I've done
like a drug dealer. Give me the first hit for free.
He got me.
It's going to benefit my life.
Well, I always say, I'll give you your first ounce for free, but after that, you got to pay for them. And don't make this your last ounce. I've done it with family, with friends. Wow. I'll do it with you as well.
Thank you very much.
For you.
That's awesome.
That's your first ounce.
There we go.
That's for free. Don't make it your last.
Thank you.
Absolute pleasure. Well, that's it.
That's legendary.
Appreciate you coming in today. And
cool.
Yeah, what a time to be alive.
Thank you.
Completely forgot about that. Glad you reminded me.